In this video, I'm going to explain a complete Smart Money Concepts price action model using the 1-hour time frame. This is not indicator-based trading. This is not prediction. This is understanding intention. Every candle you see on this chart represents orders being executed, liquidity being collected, and institutions positioning themselves for the next move. If you understand how liquidity sweep, point of structure, inducement, and buy-side liquidity work together, you will stop reacting emotionally and start trading with logic. So let us break this chart down step by step, exactly how smart money sees it. First, focus on the liquidity sweep marked on the chart. Price moves below a previous low and clearly takes out sell-side liquidity. This move is intentional. Below these lows are stop losses of buyers, panic exit orders, weak hands forced out of positions. Retail traders think the market is breaking down here. They start selling aggressively. But institutions need sell orders to buy. This liquidity sweep provides volume, discounted pricing, emotional imbalance in the market. Once liquidity is collected, price rejects the low, telling us that selling pressure is exhausted. This is the first clue that smart money is preparing for a long move. After the liquidity sweep, price starts moving upward with strength and momentum. This move breaks previous internal structure and creates a point of interest. A point of interest is important because it tells us market control is shifting. Buyers are now stronger than sellers. Institutions are actively participating. This is not a random bounce. Strong candles with minimal pullbacks indicate aggressive institutional buying. At this stage, smart money has already entered the market, but they are not finished accumulating. This structure break confirms bullish intent on the 1-hour time frame. Now comes one of the most important parts of this setup: inducement. After the bullish move, price slows down and forms a temporary pullback and consolidation. This area is inducement. Inducement exists to invite early buyers, trap sellers who think the move is over, create liquidity for large orders. Retail traders either buy too early or sell thinking price will reverse. Both actions provide liquidity. Institutions use this liquidity to add more buy positions, enter with precision, avoid slippage. Without inducement, strong moves usually fail. With inducement, moves gain power. This is why inducement is a preparation phase, not an entry signal. Now let us identify the objective. Above the previous high, we clearly see buy-side liquidity resting. This liquidity consists of stop losses of sellers, breakout buy orders, late momentum traders. Institutions already collected sell-side liquidity below the lows. Now the market must rebalance. Price moves from sell-side liquidity to buy-side liquidity. This is not theory. This is how markets are engineered. Buy-side liquidity acts like a magnet. Once institutions finish accumulating during inducement, price expands aggressively toward this area. That expansion is not random. It is intentional delivery. Now, let us combine everything. The trade idea is simple but powerful. Liquidity sweep confirms manipulation. Point of structure confirms direction. Inducement confirms accumulation. Buy-side liquidity defines the target. The optimal buy execution happens after inducement, when price starts showing strength again. Risk is controlled by invalidation below the liquidity sweep. Reward is defined by buy-side liquidity above the highs. This creates clear bias, logical stop placement, high reward to risk potential, institutional confirmation. This is not chasing price. This is aligning with smart money. Smart Money Concepts is not about taking trades every day. It is about waiting for the market to expose its real intention. Liquidity sweep shows manipulation. Point of structure shows control. Inducement shows preparation. Buy-side liquidity shows the destination. If you train your eyes to see this process clearly on the 1-hour time frame, trading becomes calm, structured, and repeatable. For more deep institutional trading breakdowns like this, make sure you follow Discount Trader and continue learning how smart money truly moves the market.